Here at the Post Malone Raising Cane's in Utah, we pride ourselves on hand-battered chicken fingers.
Post? We do that at every Raising Cane's across the country.
Does every Raising Cane's across the country have Post Malone collector cups?
For a limited time we do. Raising Cane's chicken fingers. One love.
And good evening. We're doing it live right here, weeknights in our new 5 o'clock hour in Los Angeles. Mottek On Money, 5 nights a week for you, live on the air here on 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast for you at kbc.com, Apple, iTunes, all your favorite podcast platforms, and on the socials, too, at Frank Mottek on Twitter and Instagram. Well, mixed finish of the week on Wall Street with the Dow racking up 10 winning trading days in a row now with a closing gain of 2 points today. The S&P 500 moved up 1. The Nasdaq closed lower by 30. The Nasdaq taking a hit this week. For the week, the Dow was the star with a gain of 2.1%. The S&P 500 up nearly 1%. The Nasdaq gave back about 0.5% for the week. We did see this catch-up rally for the Dow Jones Industrial Average occurring in spite of a sporadic weakness in some of the big tech names over the past couple of weeks. We'll talk about that with Brian Perry here shortly. And the corporate earnings news, of course, one of the driving factors this week. The earnings reports for the second quarter have been mixed so far, with 18% of S&P 500 companies reporting actual results and about 75% of which have already reported exceeding analyst expectations. The hot labor summer continues in Hollywood. We're getting some news here from Deadline now. According to Deadline, and an exclusive, SAG-AFTRA's National Executive Director and Chief Negotiator is weighing in on the producer's just released statement that rebuts the Guild's recent claims about the studio's final offer before the recent strike that happened over the past week. According to Duncan Crabtree Ireland with the union, he says, "I'll certainly tell you we haven't said anything that's been misleading." He told a Deadline this afternoon at the San Diego Comic-Con event right after the studios and streamers put out their message. We put together a chart that the best of our ability reflected the proposals that we made and the counters that they made. Back and forth between the union and the AMPTP as the strike continues at SAG-AFTRA, as well as the writers, and big presence of picketers in front of the studios again today. We see American Express shares are pulling back about 4% today after reporting net income of $2.17 billion compared with just less than $2 billion in the year earlier quarter. AutoNation stock down more than 12% after the new and used car retailer posted better than expected second quarter earnings. It's pedal to the metal in the push for electric cars here in California, even though the power grid can barely handle the current demand without disruptions. Meanwhile, Tesla's earnings and big Tesla recall making news this week. We'll get an update on all things cars tonight from Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. What is it going to take to improve California's business climate? I discussed that last night with the Honorable Pete Wilson, the former governor of California. Later this hour, I'll talk business tonight with another former governor, the Honorable Gray Davis, will be joining us later this hour. Like Governor Wilson, he's part of the leadership of the Southern California Leadership Council, which includes business and civic leaders here in the Los Angeles area. Joining us live now is Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management, and, of course, a great friend of this program, author of the 25% Cash Machine. Brian, thank you very much for coming to the line here. 10 winners in a row now for the Dow Jones Industrial Average, playing catch-up to the rest of the averages. Major averages kissing new highs for the year this week. Give us your view of things here at the moment.
Thanks, Frank. And there's some catch-up, as you mentioned, with the Dow Jones taking place here. It's still only up about 6.3% year-to-date. Relative to the Nasdaq, up 34%, and the S&P up 18%. Russell's up 11%. Mid caps are up about 11% as well. So there's more to go for the Dow, but there is some real rotation taking place here in some of the value stocks, the Procter & Gamble's of the world, but also in the industrials here, which is starting to raise up here, which raises the specter of the recession here that has been so forthcoming by so many naysayers out there, for the stock market that just hasn't materialized. And as you noted in your opening comments here, earnings season is coming off to a pretty decent start right now. So this rotation that we're seeing into the more cyclical names here is very healthy for the market. And it came at the expense here of the Nasdaq really needed to take a breather here to relieve itself of a lot of short-term overbought condition. And it took a big, deep breath this week here as other value sectors led the Dow higher, and so that's very constructive and structural for the bull market to continue its trend higher. Earnings season again is off to better than expected start here. The banks did better than even I would have expected here. Those are the mega banks, and we haven't seen a lot of the community banks and regional banks report yet. But a good start for the big mega banks here. Goldman Sachs, certainly J.P. Morgan is they're in the catbird seat right now for taking on assets here and doing extremely well. But with interest rates here probably peaking in here, then we're probably seeing the net interest income in banks here starting to plateau up in here. So I'd be very careful not to be piling into the bank sector here right now. I still think in the second half of the year we're going to start to see some slower growth trends for loan demand and originations. So that's something to be careful of here. NASDAQ was clipped here by a couple things here that developed this week here. We saw Netflix come in with disappointing numbers here, and there was a lot of expectation that they would just have a blowout quarter here, as well as in the chip equipment space. ASML lithography, it's one of the big chip equipment makers. They came in and disappointed as well, and just gave some guarded guidance. But this is what you start to see here with a lot of expectations that are built in, maybe too hot coming into earnings season for big tech. And so when they come in and they give good numbers, but they're not overwhelming numbers, and therefore you have a reason for some hot money to come off the table. And that's what we saw this week. So I'm fine with how things are shaping up, Frank. And we had next week is going to be enormous here with you have Meta, you've got Alphabet, you've got Microsoft. You've got the Fed meeting coming in. You've got also meetings from central banks for the ECB, the Bank of Japan, and the economic calendar. We're going to get advanced second quarter GDP. We're going to get personal income and spending for the second quarter. And then also we're going to get the Fed's preferred inflation gauge in the form of what's called core PCE price index. It's a chock-filled week full of all kinds of earnings news and economic news that's going to be pivotal to the trend. But I'd really like the setup here where the market took did some back and filling here this week in the leadership names, and then sets itself up nicely for what should be a continuation of this trend higher.
On the air live with Brian Perry, an investment expert. And Brian, let me ask you this then: what do you think is going to happen next week? As you mentioned, with the Fed meeting deciding on interest rates, and the expectation here is another quarter-point bump, or might we get a surprise next week?
No. There's roughly a 99% chance of that the Fed's going to raise this by a quarter point to 5.25 to 5.5. But there's only about a 15% probability that they're going to boost it another quarter point in September. So this is maybe one where they raise and they skip, and then look forward to November as the next possible rate hike. And there might be some reason for that, Frank, because we've seen commodity prices here in the last week really vault higher here. Again, wheat prices, soybeans, corn, things like that because of what's happening in Ukraine. There's a lot of problems now with the export issues there with Russia, getting grain out of that country here. And that's a big part of the breadbasket over there for Europe. So here we go again, play it again, Sam, with the commodity squeeze. That could be a problem here for inflation here going forward for food. And that's a big component. And it's something that the Fed tracks very carefully here. The three main, items in that area that remain sticky are shelter, professional services, and labor and wages. So as long as those are, they're holding up at those levels, and then the Fed will probably stay up here for longer. And there is risk to the upside that they could raise another quarter point here in November if this food inflation thing takes off again on us.
Brian, let me ask you this. One of the meme stocks took off today. Shares in AMC Theaters soared by about 70%. At one point, they were up 100% after a court in Delaware blocked parent AMC Entertainment Holdings from proceeding with a plan to convert AMC preferred equity units, or so-called APEs, into the company's common shares. Give us your reaction to that and tell us what we need to know about that.
Well, that's a short squeeze here in the aftermarket, Frank, because what that does, converting the apes would have really diluted the stock a lot, and that's where the short squeeze came in from, and that's what the meme holders were hoping to see, that the court would block that. However, the company they've got a mountain of debt, and it just seems like they really haven't gotten their footing back, from theater going as it was before the pandemic. So the company is swimming in debt, and even though they're not going to dilute the stock at this point in time, what's their alternative? To bring more debt to the market here? So they face a further credit downgrade, by the rating institutions. and that's not good for the company here. I would be very careful not to buy that stock right here, even after, because it's a big short squeeze going on right now. It's probably going to fade in the next few days here. So it's something that I would just watch from the sideline and enjoy the show, as they say, but don't play it.
All right. And, of course, AMC also in the spotlight with Barbie and Oppenheimer boosting sales, apparently, as people head to the theaters this weekend. And it's hot enough, certainly, so that's one place to cool off. And what about what's happening here in Hollywood and the media names continuing to be under tremendous pressure with the whole industry shut down at this point because of the strikes involving the writers and the actors over the past week now, the writers' strike more than 2 months old. Give us your assessment of what's happening with the media names here.
Well, this is attrition taking place and taking hold here, and this hurts. Definitely the filmmakers. Whether it's Warner Brothers and certainly Disney. Disney not only under attack, in Florida, with Ron DeSantis, the campaign going on there, but certainly now in California, and these are high ticket prices here, and what's going on in the movie business is, and Sony, another one that's seeing some pressure there, but that's not an enormously huge part of their business. After they bought Columbia Pictures a while back. I think Disney's people should be very careful here. There's a lot of people that saying it's a great buy down here, but I just think, at this level right now, which is trading near the 52-week low, which is, it's 87 now, the 84 is the low. Be very careful here because this stock could take a turn lower here. They've got some issues here trying to, off ESPN, which hasn't happened here. And it just seems as if there's just a lot of not very good mojo, for Disney at this level here, and they're the big dog in this media, sphere. Netflix is also, it's because they missed their numbers now. People are also starting to look at their movie making business in terms of are they going to be able to put out the kind of content that they have in the past at the same rate. Amazon, again, not as big of a threat to them, but still the stock came in here this week. So this has an overlaying effect here on the industry as long as it plays out further and it gets more embedded and entrenched, Frank, then it's not a good place to start bargain hunting until you see the whites of the eyes of some negotiations here start to take a positive spin. All
right, Tesla have been having quite a run this year, and Elon Musk has benefited tremendously with his wealth. And I don't know if you saw the latest predictions here. Elon Musk himself apparently went on in reaction to Kathy Wood's prediction here that the stock is going to go up 10 times where it is now. What's your view on where Tesla heads from here?
Well, again, it's a company here that's becoming in the arms business of the EV business now. So they're going to become a supplier of batteries to many other companies. They're going to become probably the nation's largest charging station network out there. And you've got the AI business that he just started here recently in Las Vegas, which is going to start incorporate into Tesla. Self-driving cars here. They're going after the global taxi business here, which I think is going to be huge. And they're spreading out. And this is what Elon does really well. Plus, he's a magnificent master of pricing conditions. So when he sees demand start to wane a little bit, then they come in with heavy discounts and they bring sales right back up. And then when there's it seems like people are feeling good about their conditions, then he raises prices. So they're very flexible that way. I find it to be just extremely well managed company. And he's he might be the smartest guy in the planet, but he's also just a very clever guy. And I think this is really where he's taking this next. And imagine the AI business that he's thinking of doing here. After he's had a chance to see everything else roll out. So I think he's not a latecomer, but he's been a good observer of what Microsoft and what Alphabet and what other companies have been able to bring forth to the market here with their generative AI, and I think he's going to just take it to another level. So I'm very excited for what he's about to bring. And the stock has come down a lot. It really got corrected here from 300 down to 260. It has support around 240 or so, maybe around even as low as 225. If it gets down there, Frank, then I think people should take a hard look.
All right. Let me ask you the money question now, or I should say the Mottek On Money question here now. Brian, where are you putting money now and or taking it off the table?
Well, putting on, I think, because we had this pullback here in the Magnificent Seven here, just you've had some really nice pullbacks, and people are wondering when do I start buying into these names, and I think you're going to see some good numbers come out of this Mag 7.
Time offer. That's sweetdeals.com. Stacking Benjamins with Joe and his good friend OG not only has great financial insight, it's laid back with humor too.
Dollar cost averaging works because everything else doesn't. Let me put that a different way. But dollar cost averaging works every time. Just keep buying.
60% of the time, it works every time.
People spend a lot of time, OG, worrying about when to buy.
This is really simple. You should invest when you have the money, and you should withdraw the money when you need the money. Boom.
There it is.
I believe they call that a mic drop.
The Stacking Benjamin Show, available on YouTube or wherever you listen.
Sector of had Meta come in from 316 to 294, Microsoft 366 to 344, Nvidia 480 to 443, Tesla we said 300 to 260, Apple 198 to 192, not much there. Google 128 to 120, not much there, and Amazon 130 to 136 to 130, not much there. But in here, I think Microsoft is a buy. I think Amazon is also a buy down here. There's another company called Unity Software, which is in the new Apple headset here. So I think that's going to be a strong name there. So the symbol is U. Also. With Activision coming out, with this deal happening with Activision here, people should maybe take that trade off the table here. It's trading around 92. The deal's at 95. It's not going to close till October. I think if you leave 3 points on the table and then rotate your cash into something else, that's probably not as smart. And I would probably start to buy Take-Two, which is their competitor, TTWO, which is going to have just rock and roll earnings here going forward here for the next year or so. Look at TTWO on a pullback. And again, another takeout possibility on that end. I've been buying some Hilton in here too, Frank. Worldwide global travel here is really on a big uptick. Uber, same thing, in the same field here that you're starting to see a lot of momentum here, and it's almost becoming a one-horse race with Uber taking over here. And on the taking off, you just still have to look at, I don't like I said earlier, the banks. I think B of A here, I saw a lot of insider selling right up in here at 32. So take a look at maybe taking a trade on B of A. It's made a big move up here. And again, I think that these banks here are not the greatest growth story going forward. I think it's something that they're a trade, and they've had a nice move here. Same thing with U.S. Bancorp. Same thing. USB moved up here. They're both trading right up against their 200-day moving averages here, and I think they come off. Same problem here with Winnebago. We talked about that a week ago. It just they had very poor guidance here. The stock ran up with the market, had a free ride, and WGO looks like that's a pullback coming further. And then these phone companies, AT&T, Verizon, and then this big pharmaceutical company called Pfizer, all look very, very soft. And so I think there's more downside there. So I'd just be very careful not to try to bargain hunt in a market where it seems like fund managers and professional managers that really want to have stocks that have strong growth prospects here, not trying to play bottom fishers, and just really want to buy great stocks and great charts on big pullbacks. And that's what we're getting right now coming into the next week.
All right. What about what's happening with the dollar? As the dollar is weakened, stocks have moved higher. Right now, the dollar is at 111 versus the euro, 142 versus the yen, and $1.28 versus the British pound sterling. What about the dollar and commodity prices? We see oil, as the dollar has been weakening. The oil is up close to $77 a barrel again. That's not good news for drivers out there this evening. And gold hovering at around 1,965 here. Give us your thoughts on those here at the moment.
Well, that just plays right back into the whole inflation theme again here. Now, dollar down, risk on. That's one thing with the stock market, but then you have these headwinds here with gold trading higher here as well as commodities. And so, there's a fine line there between when that's all in good balance with each other, and then when it starts to become more of a headwind. I think gold it's still in a major long-term secular bull market here, but it's starting to look like it's going to put another leg in higher here. Oil has sneaked up here, against what a lot of people were just kind of throwing in the towel on oil here just not too long ago. So that's interesting play because you're up here around 77, 78 on WTI. The big oil integrateds haven't moved yet, but the the oil field services stocks have just ripped higher, and that's an interesting take on the sector because you've got this oil services sector which is trading very strongly, but the integrateds are still lagging. That might be a good catch-up trade there. So people say, well, if oil sticks, then maybe take a hard look at ExxonMobil and Chevron as a catch-up trade there because you're buying great quality, getting good dividends, and again, if we are not going to slide into a recession here, then certainly the integrateds will certainly be a good place to buy in terms of buying way off the highs here and then locking in those good prices. Beyond that, Frank, it's a hot summer, and I still like EQT, which is the largest natural gas producer in the United States, trading at $40, symbols EQT. And so take a look at that for those that want to have a pure play on natural gas.
Terrific, Brian. Well, thank you very much for that thorough assessment here. We do appreciate it. That is Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management. Also, author of the 25% Cash Machine. Hopefully you can get that machine cranked up again, Brian. Always great to speak with you. Thank you very much for joining us live, and we wish you a great weekend.
Okay. Thanks so much, Frank. Stay cool.
All right. We're going to do it. We're going to try it. Don't give in to that constant joint pain. Take control today. Take back your quality of life with help from QC Kinetics. Frank Mottek here. QC Kinetics is helping people every day here and all across the country with their amazing non-surgical treatments that repair and restore damaged joint tissue. They use the latest advances in regenerative medicine, taking your own body's healing agents and concentrating them right in the area where you have that, agonizing pain. This incredible non-invasive approach helps you take back control of your body, relieving the pain in your knees, hips, shoulders, or back. No invasive surgery, no harmful drugs or steroids, and no downtime. Summertime needs to be about having fun out there, making memories, golfing, hiking, enjoying the outdoors. Take control now and start living pain-free again. Call QC Kinetics. Locations in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. Call 213-997-PAIN. 213-997-PAIN. Again, that's 213-997-PAIN. Mottek On Money continues here on 790 KABC. Good evening. Mixed finish to the week on Wall Street where the Dow continued to shine, up 10 sessions in a row. The Dow up 2.5 points at 35,228. The S&P 500 gained a point at 4,536. And the Nasdaq pulling back 30 at 14,033. All the major averages kissed new highs for the year this past week. The yield in the 10-year note now, 3.84%. It has ticked slightly higher this past week. That's the one that impacts the fixed-rate mortgage rates out there. The price of oil, quietly moving higher again, up to nearly $77 a barrel now, up $1.18. Gold hovering at around $1,964 an ounce. In the crypto world, we see Bitcoin right now up about $40 at $29,932. Ethereum down at $1,893. And Doge at the moment at 7 cents. Mottek On Money continues here on 790 KABC. Good evening. It's pedal to the metal in the push for electric cars here in California, even though the power grid can barely handle the current demand without disruptions. Tesla got a lot of attention this week on its earnings news. Also a big Tesla recall making news, and Tesla going big into robo-taxis. A lot to talk about what's happening in the car business in car-conscious Southern California. Let's bring in Lauren Fix now, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, thanks so much for taking the call here. First of all, on Tesla, big recall that impacts consumers out there. Tell us more about that, first of all.
Well, Tesla's had a few recalls over the years. Anytime you have a recall, it's really important that you contact the service center and get something taken care of, whatever it might be. Even if you're unsure if your vehicle is one of the ones that are being recalled, it's important that you call and find out. Give them the vehicle identification number. That'll help you with the recall. Right now, we're looking at 16,000 of its 2021 to 2023 Model S and Model X vehicles, and it's about seatbelts. So that's obviously a very important safety feature. So if your seatbelts aren't working, obviously don't drive the car. If you're unsure if your vehicle is one of those vehicles, call their 800 number, talk to the service center, and give them the identification number. If you're in that window, go get it fixed. Please don't be driving around with a seatbelt that may not be functioning properly.
All right. Already, investors seem to be excited about Tesla getting into the robo-taxi business, non-existent business yet, but a lot of optimism that this is going to benefit Tesla, especially. What do you see ahead on that?
Well, as far as robo-taxis, others have tried that, and I don't know if that necessarily works because if you're in California now and you decide that you want to use one of the robo-taxis, be forewarned, if you're in the vehicle and it rains, the vehicle will pull over. It does not function well in the rain because there's reflection off of the raindrops.
Stacking Benjamins with Joe and his good friend OG not only has great financial insight, it's laid back with humor too.
Dollar cost averaging works because everything else doesn't. Let me put that a different way. But dollar cost averaging works every time. Just keep buying.
60% of the time, it works every time.
People spend a lot of time, OG, worrying about when to buy.
This is really simple. You should invest when you have the money, and you should withdraw the money when you need the money. Boom.
There it is.
I believe they call that a mic drop.
The Stacking Benjamin Show, available on YouTube or wherever you listen.
We're all juggling life, a career, and trying to build a little bit of wealth. The Brown Ambition podcast with host Mandy and Tiffany the Budgetnista can help.
HGTV's Paige Turner.
People are wanting to buy a home. Is it a buyer's market? Is it seller's market? Is it neither?
It's neither. If you're in a position to buy a home, and if it makes more sense to own than to rent at this time in your life, then buy the house. Just don't buy the house thinking in 6 months you're going to make a $400,000 profit off of it, because that's not there anymore.
Brown Ambition.
Wherever you listen.
And it makes it unsafe. So there are other robo-taxis out there, such as Waymo. They've been around for a while. When that happens, just be fair warned that you're going to have to wait for the next person to be driving a taxi to take you to your final destination. It's in progress. It's still a work in progress, although Elon Musk is still the Pied Piper. I mean, showing us the Cybertruck, telling us that this is the next vehicle, but then during the quarterly meeting, he's like, well, this is the first one. We're not going to see any of these for a while, which doesn't surprise me at all. He certainly knows how to pump up the stock.
Did I see correctly that Cruise and Waymo said humans are bad drivers amid the robo-taxi permit delays and along the lines of what you just mentioned, that it's our fault, what's happening out there?
Of course. It's easy to pass the blame, but you have to share the roads with the robo-taxis that are out there, especially in the LA and San Francisco area. They're out there, they're being tested. This is not the final be-all, end-all. And there are bad drivers. People are distracted. I would honestly say my assessment, since COVID, I've noticed people just not paying attention. I don't know if that has anything to do with it. It just seems to be the timing. But I see people with their heads in their phones, distracted by the radio and literally everything else. So that's why Cruise and Waymo was saying that humans are bad drivers and that the robo-taxis are a better way. But the only way the robo-taxis work best is if every single car on the road was autonomous. Then it would be fine. Otherwise, there will be accidents, and that's where the insurance companies really don't like the robo-taxis. We still don't have government regulations on this yet, so we're a long way off from robo-taxis being the main transportation.
Right, we've had self-driving cars out there for quite some time. People putting on makeup, right? Looking in the mirror on their phone and looking at the radio or whatever. So, this has been going on for some time. And then put real self-driving cars in the mix. That's going to really be something.
Oh, yeah, I think we're far from that. We're at level 2 right now. So what you're seeing is a cool technology from Mercedes is just entering level 3 territory of 5 levels. 5 is you get into the pod, essentially, and it takes you to your destination, and it can handle every single possible facet of issue that might get in its way. We are so far from that. Even though Tesla's saying that the autopilot is autonomous, it is not. It is basically a level 2. No one has anything beyond level 3, and the only one that is at level 3, which is the middle of the technology, is Mercedes, and they're testing that right now in Arizona. But we are far from seeing that in production cars. But that technology is the slow progression that you're going to get from a lot of brands. You've seen Copilot 360, which is lane center. We got Blue Cruise from Ford. You've got Super Cruise from General Motors. I would say Super Cruise is probably far beyond what Autopilot is offering with Tesla. So if you're looking for something that's semi-autonomous, that'd be your closest to getting to something that would make life a little easier for you.
We just heard our previous guest compliment Elon Musk and his team there at Tesla on cutting prices when they see a need to do that and raising them when things are going well. What about EV pricing these days? What do you see? Where are the bargains?
Well, it's funny that you say that because right now, as of earlier this week, Ford dropped their price on their F-Series truck, which is called the Lightning, by almost $10,000. You add that in with your $7,500 tax credit because it's a U.S.-built truck, and the state credit, you could be saving almost $20,000. That's a lot of savings. So there is inventory right now on the Ford Lightning truck and the Mach-E. So if you're looking for those, there are all kinds of incentives to get you into those vehicles. We've noticed that on the used car side, the biggest drop in price is the Tesla Model 3 has dropped, believe it or not, 30%. That's a huge drop in price. If you're thinking you'd like a Tesla, you want something used, it's certainly an option. You can go through their website and save some money. The other option, of course, people are trading them in for other vehicles as well. But if you're thinking you'd like to get something new, there's a lot of great products out there. Inventories are starting to fill in. Used car prices are starting to soften, and all that means it's good for consumers. But be forewarned, if you do not have a 700 credit score or higher, it is very difficult to get a loan right now. All those subprime loans, a 650 and less on your credit score, it's very difficult to get a loan. I have 3 or 4 friends that have very low credit scores that have been trying to get loans, and they're asking for almost 50% down. So if you have the cash, you might as well just go buy something. So look at the numbers, see if it works for you. If you can't afford it, maybe keep what you have or try to pay cash for something.
In the meantime, there's a scramble for power as all of this comes up, and we see PG&E here in California testing some sort of new technology that could turn California EVs into a fleet of mobile batteries. Looks like they want to harness the power of all of the car batteries to help the grid on future high-demand days by plugging their home charging station. Electric vehicle owners could sell unused power from their car's battery back to PG&E or use the car as a big generator during an outage. What do you think of this latest idea?
We've tried this before. Besides the fact that if you have your vehicle's got a full charge, whatever brand type it is, and you have it plugged to the wall, power goes out, and they decide they want to draw the power from your vehicle. If you need to get in your vehicle and drive away, you will have less power in your battery. I don't think people are going to be game for that. If you've got solar or wind, there was a time where PG&E was buying that power back, but I've been told by my friends that live in California that that's no longer the case now, unless you're going to go back and do that, where your wind and solar that you take from your home, solar would be easier with the solar panels, whatever's excess could be sold back to the grid. That would be good for consumers, but I have a sinking feeling that's not what their plan is. Their plan is they're going to draw from your car. That would be the reverse direction that you would want. And so you have a full charge that you paid for, but then end up getting in your vehicle and having half a charge. I think customers would be very unhappy with that.
I think so, too. And what about electric pickup trucks? You mentioned Ford slashing the prices on the electric pickup trucks. Now, you got a good feel for a consumer demand out there. Is it that people are rejecting those trucks and prefer good old gas-powered pickup trucks?
Well, it wouldn't be that brand specifically, because I think in general there was a high demand for people who wanted electric vehicles to begin with for whatever reason, personal reasons, for political reasons, for just they wanted to try some new technology. That's great. But we're seeing almost a saturation now across the entire country. There is inventory sitting on lots, and what they call it is turn. How long does a vehicle sit on the lot? So before, in June, we were seeing about 92 days of cars sitting on lots before they were sold. That's not good for dealers. Dealers want your car sold within 15 days, which is the sweet spot, because after 90 days, they're paying 3 months of finance fees on it. That's called floor planning. So the dealers are the ones taking the hit on that. And then when the vehicle's sold, they obviously pay back the loan on it. So the quicker they sell it, the better. Right now, as of July, we're looking at about 115 days of inventory. That's a lot. That means dealers have them. If you go by your local lot and you're driving around today as you're listening to your show, take a look at the dealer lots. See if the electric vehicles are sitting there. In other areas of the country, like where I am, I'm on the East Coast, dealers are saying there's zero interest. They're trying to show it to people. Check out this great new BZ4X or the Hyundai. They're saying that they're not interested. Consumers want electric cars for a multitude of reasons, and there needs to be a mix. And I think if you want electric, you should be able to buy it, or a plug-in hybrid, or a hybrid, or gas, and let consumers make the choice, because in the end, the consumer will always make the choice. They'll move with their dollars.
Certainly. Lauren, you're terrific. Thank you very much for taking the call live with us here tonight. That is Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast, live with us here tonight on Mottek On Money on 790 KBC. It is jarring to have a car accident out there and hard to think clearly when you're hit. So my friend, attorney Clark Fielding of Fielding Law, created something to help you. It's called Be Prepared Before a Motor Vehicle Accident, a new guide for you. The guide is one page, fits right there in your glove compartment, and gives you everything you need in case you're hurt in an accident. Go to clarkthesharklaw.com and download your free one-page guide and keep it right there in the glove box. Put Clark Fielding's number in your phone under the word accident, so all you have to do is hit the number when you need him. Tell your family and friends to do the same. So if you're injured in an accident, call the one we all trust, attorney Clark Fielding. The number is 833-88-SHARK, 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 and download the Be Prepared Before a Motor Vehicle Accident. That's the new guide at clarkthesharklaw.com. clarkthesharklaw.com. Again, that's clarkthesharklaw.com.
Mottek On Money continues here on 790 KABC. Joining me now, the Honorable Gray Davis, former governor of California. Governor Davis, also part of the Southern California Leadership Council, just heard a presentation on business here and what it's going to take to turn the economy in California around. Governor Davis, give us your impressions of the big issues facing businesses and what it's going to take.
First of all, we have to allow the American dream to be the same reality for this generation as it was the past several generations, and housing is the key to that. So we are talking about reinstating some form of the Community Redevelopment Act, particularly the 25% of it that went for affordable housing up and down that state. That's $5 billion a year that just got taken away from local government coffers. Let's put local government back in the incentive business and let them build housing. Otherwise, people are going to move out of the state because they just can't find a house they can afford.
Governor Davis, certainly crime and homelessness at or near the top of the list of business concerns. How would you address those big issues, sir?
Public safety is job number one for any elected official. I certainly felt that way as governor. I know Governor Wilson felt that way, and Governor Schwarzenegger felt that way. People need to feel safe, and you need to take the steps necessary to do that.
All right, what about taxes and fees, which appear to be topping the list of the latest BizFed Pulse poll, for example? What is it going to take to make California more business-friendly?
I believed in targeted tax credits. I was very happy that Silicon Valley was essentially being born my second year in office, and there were all kinds of tax credits, electronic signatures, teaching your employees to having them go back and gain new skill sets, make that a taxable deduction, all kinds of things to help Silicon Valley grow into what it's become today. So we have to be smart about this. There has to be a reason people come to California. If you can't get a home, you're not going to come. If you can't find a job that you're qualified for, you're not going to come. But here's some good news. The last 10 years, 40% of all the Nobel Prizes for science went to Californians. We got 18, that was 40%. Texas got 2, New York, New Jersey got 4. The second place state was New Jersey at 6. So 300% more Nobel Prizes than anyone else, and 47,000 patents. It takes the next 5 states in America to get close to 47,000 patents. So if you want to invent something, California and its great educational system is the place to be.
While we have the chance here, Governor, your comments about this hot labor summer with the strikes underway in Hollywood and the hotels and possibly the UPS Teamsters locking horns next month. Give us your impressions of what's happening here.
Look, I think people have a right to protest and strike, make a decent living, own a house, educate their children. That's part of the American way. What it takes is somebody who can bring both sides together, both streamers, studios, and actors and writers, and say, look, at the end of the day, we all need each other, and for any of us to make money, we all have to find a path forward. I can't tell all those entities what to do, but I think of yourself as a baseball owner, and the team is striking. Well, your business is owning the baseball team. You need the team back on the field. And we need actors paid well, SAG, writers paid well, and we need more entertainment. Fall season is just about lost already. We certainly don't want to lose the spring and the summer of next year. So my hope is that someone will emerge as a reasonable mediator, find common ground, let people make more money, and let's get back to work.
Governor Davis, thank you very much for joining us here. That is the Honorable Gray Davis on Mottek On Money on 790 KABC.
Thank you, Frank.
Thank you very much, Governor. Shares of AMC Entertainment Holdings in the spotlight after hours today, rocketing more than 60% after a judge in Delaware shot down a settlement that would have allowed the movie theater chain to move ahead with a plan maligned by some investors to dump more shares onto the market. According to MarketWatch, AMC had wanted to turn its so-called APE or AMC Preferred Equity preferred units into common stock, but a Delaware judge rejected an earlier settlement that would have allowed that conversion to move forward. The theater chain's been looking to find ways to boost its share count and sell more shares, something that helped it through the pandemic as it tried to shore up its finances and rein in its debt, according to the Wall Street Journal. We'll be watching AMC stock when the trading resumes on Monday, and the Dow at a new high for the year, up 10 sessions in a row. We'll pick up where we left off. First thing, Monday, be back in the 5 o'clock hour right here with Mottek On Money on 790 KBC.